in-house M&A and middle market bankers. We have an equity capital market advisory, and you can see some of our transactions that we recently done. So we have an IPO team in-house together with a corporate structure team. As I already said, we also have a capital structure advisory team, which is expected to be fully dedicated in such a difficult time for various sectors, mostly every sector in the economy. When it comes down to food and beverage, we are probably the preferred financial advisor to many companies. Just to mention a few, AB InBev is one of our largest clients. We advise them since they started to grow via M&A, including the iconic acquisition of Sub Miller, and then the later on disposal of few businesses. We did the Heinz and Kraft combination. We advised Ferrero when they started to use M&A as a growth tool. So with the Ferrara Candy Company and the US confectionery business of Nestlé. We advised Bacardi in the Patron acquisition 3 years ago, and many others. Within the restaurant chain, we happen to do, I would say, some relevant transaction, including the Vapiano IPO, the disposal of La Piadineria to Permira, the acquisition of Rosso Pomodoro by OP Capital, and the disposal of Sushi Shop to Armrest, again, 2 years ago. Few words on the capital structure advisory. We, in a nutshell, help company in addressing the capital structure issue, both with regards to debt issuances, and again, we are the only and the most relevant player with unconstrained capital conflicts. And then there's the equity capital market leg. In terms of restructuring, something that, of course, sometimes happened. We have roughly 50 bankers in Europe, I think roughly other 100 bankers globally, and we won relevant international awards. Thank you for this very few introduction on myself and LAZARD.
Thank you, Francesco. We are very lucky to have Francesco today with us because he's one of the very few high-profile M&A professionals with a deep understanding of the restaurant industry. There are not many, and you're one of the few. So thank you for that. I won't present WHITESPACE Partners because I hope that most of you know what we're doing. We're strategic advisors in the restaurant industry, and if you want, so we try also on our side to understand something about the restaurant industry. But if you want to know more about us, you can go on our website, and you should learn everything you want to learn about what we do and our team. So I would like to jump on the first question directly, Francesco. I think that one of the main issues we have in front of us is the timing. This kind of ramp up that we will have after the crisis. Can you just in terms of timeline tell us a few words about how is the situation now in Milano in terms of since you are based in Milano, in terms of exit of the crisis and reopening of the restaurants?
Sure, we are still in lockdown. The Italian government recently pushed forward some initiative to release the lockdown provisions. Some industry are going to reopen actually next Monday. The restaurants, bar and pubs are going to reopen starting from the 1st of June. Of course, this is nobody really knows how the restaurant will be up and running again, simply because there's a lot of thoughts currently done and to be done in terms of social distancing. Surely the social distancing implies then restaurant cannot have the same seats it used to have before. We know that there's going to be more space outside the restaurants, so on the pavement of the street, in order to offset the decrease in number. Surely it's not easy to say when the situation will restabilize. Probably it's gonna be a V curve. So sooner or later, in the near or mid-term, everything will back to normality. Although I personally think that the social distancing measures will still be prolonged for quite few months since the reopening of the industry.
And these social distancing measures that we will see them, I think, in all the countries that are getting out of the lockdown. So these social distancing measures will deeply affect the business model of our restaurants, because we're a business where everything is about cover rotation and client flow. So how do you see the impact on the business model of these social distancing measures?
Difficult to predict. Surely the lower number of tables implies then the financial break-even of any restaurant will be higher. Therefore, we expect to see a higher number of non-performing stores. Surely nowadays, virtually all the companies are assessing their cash position, are trying to grab the state aid contribution in a different form and shapes all across Europe. I think most of them are trying to discuss with landlords with regards to ease the payment in this period, renegotiate the rent, link them to the actual revenues of any company. The industry has within its DNA the creativity that make the sector so profitable and so healthy in the past. And of course, sorry, forgot to mention that of course across Europe there are different kind of maturity of the market. My actual point of view is Italy, which is lagging behind some more mature markets such as the UK. But the consideration I stated before are pretty much true for all the restaurants in Europe. So I think most of the companies are currently rethinking their growth plan. We expect a lower number of openings. For the break-even at store level consideration we did before, we expect some closure of stores. The industry has to find new ways of coping with the limited number of seats available, and this of course will be very much different between the quick service, the fast casual, and the very high level dining restaurants.
Yeah, which means that if I'm a restaurant operator, probably out of my, 50 units, maybe before the crisis, I had 45 performing well and 5 maybe slightly underperforming. Maybe now I will have 20 or 25 underperforming, and I don't know for how long. So how will the investors will be able to how the investors will react in such a situation? How would they be able to understand how to make an offer for a restaurant group in this context?
Well, I think let's distinguish the incumbent in financial investor owning a restaurant and the third party. The third party, so people that was looking to buy a restaurant chain, nowadays are adopting a more cautious approach, simply because they don't know when the situation when and how the situation will recover. So there's a huge question mark on the profitability going forward of the restaurant chains. That means I think very few are looking at deploying capital in the sector right now. Mostly are monitoring the situations. Of course, there could be opportunistic investors willing to help some companies that are struggling to go through this phase. M&A processes that were either ongoing or about to be launched before COVID are currently on hold. Will probably be resumed after this period. But again, I think that any restaurants willing to be part of the M&A process has to build a track record of performances post-COVID.
And which means that the investors, if I summarize, they have to understand, first of all, when we will get out of the COVID, because we're hopefully close to be out of it, but it doesn't happen yet. What will be the impact on the business they're assessing? What will be also the impact on the financial structure of the company? What kind of profitability we're talking about? What kind of EBITDA? What kind of debt? And then also they will have to understand what kind of asset they want post-COVID. Do I want to invest only in a quick service or fast casual? Do I want to invest in a delivery-oriented concept? What about casual dining? What about fine dining?
You're right. On the impact of the COVID period can be either on the debt and the cash position of the company and the profitability of the company. In the long term, the impact on the cash position and debt on the company is quite neutral because it's a ratio 1-to-1 when it deals with M&A. The real impact is going to be on profitability. And I mean, lower profitability means lower valuation at equal EBITDA multiple. But I do think that M&A multiple will be lower than post-COVID period, simply because potentially profitability is going to be lower than before COVID for a number of months.
And growth potential also, which is one of the key drivers for the multiples. You sell the future, and if your future is flat, probably your multiple will not be super exciting.
That's correct. Owners are currently thinking about their current footprint. So whether to close some no longer profitable point of sale or not, and surely they will lower the number of new openings. So lower pipeline means a lower EBITDA target in the long run, and so lower valuation, I would say. Yeah.
And one thing which is also a question mark for me. I mean, before the crisis, the restaurant industry was one of the most dynamic segments of the, let's say, of the overall retail, and so it was a relatively sexy industry for investors, and these investors, they still have a lot of money to invest. They have all these dry powder stock. So where will that go? Can they wait and do not and I mean, keep on hold all the deals, or will they anyway go somewhere, can be investing in their current portfolio to do some build up, or will they go on turnaround deals?
It's not easy to answer that. I think there will be a mix of wait and see approach. So let's see how restaurant industry will get out of this period, and if it will get out in a good shape. Yes, there will be investors to inject money in a traditional M&A manner. I said before, opportunistic players willing to step in right now, trying to fix the situation, bet on a quicker and smoother recovery of the industry. And then I can also see existing investors already in the sector to try to do the maximum they can to support their portfolio company.
Do you see any strong consolidation in the industry?
It can happen, although my view is that it's not very likely, simply because the issues that all operators currently have, and the focus on fixing their own situation. But I can't completely rule out this possibility.
And Francesco, I mean, LAZARD is one of the most renowned financial advisor for everything which is restructuring and turnaround. Yep. I think that you have been yourself also quite involved in turnarounds. Do you see a turnaround business arising in the restaurant industry in the coming months? From an investor perspective?
There might be some looking at opportunities, taking aside investors buying the debt at discount. I can see the possibility that some investors take over food retailers or restaurant chains, again with the opportunistic approach and maybe an optimistic view on future recovery of the market.
Okay.
Although really, yeah. Vincent, the question mark is how will the normal life will be in the future for the industry, meaning how long will the social distancing measure will take place, and how smart and innovative the owners are going to be in order to offset a natural decline due to the social distancing. Delivery can be an option, but we all know the profitability attached to that kind of business. We think that takeaway can be an option, maybe also profiting from the good season we are about to step in. There's going to be lower number of SKU per restaurant in order to minimize the complexity of the kitchen part of the restaurant, and maybe save some money in personnel. New packaging or new format. The good thing, if we can find one, is that the market share you get right now on the delivery part are most likely to remain in the post-COVID phase. So this can be an angle through which the food chain operator can offset a decline in the recovery and ramp-up phase.
Yes, and this has been clearly an accelerator, which is an interesting move. And if we want also to add a positive, let's say, expectation, hope, if this can also push the customers, especially in our countries, France, Italy, to Spain. I mean, there are many, to have their lunch and their dinner at different times, instead of having everybody the lunch at 12:30 or 1, or the dinner at 8:30. It would, of course, drastically help the business model of the restaurant operators, because in many countries, lunch and dinner times are very, very concentrated. This is fascinating. So we all cross fingers to have exciting times in front of us. Anyway, this will be, with no doubt, times of reconstruction, and all the values that have been burned will have to be created again. Now, Maria Paola probably has some questions from the audience.
Yes, hi, here we are. We have so many questions. So we touch question on delivery, of course. And starting with, and which type of F&B chains or restaurant do you feel are best placed operationally to run profitably? For example, quick service, formal dining. Which type of F&B chains or restaurant do you feel are the best place?
Vincent, don't know if you agree, but I would say the quick restaurant kind of stores are those that already has a leaner and easier business model. Mostly based on takeaway that can be better suited to cope with the current and the expected near-term situation. while on the other hand, formal dining or restaurant, I'm not sure whether they were very successful. At least not all of them were very successful before COVID. Right now, the situation, I think, would be exacerbated. I expect lower tables and higher price tag in a situation in which the economy will be poorer than before.
Yeah, if I may add something, I fully agree with you. The big point is to understand if we have in front of us a difficult period or a new world. And it's not the same thing, because if we have in front of us a difficult period, I would say that the best models are the ones that were already the best models before the crisis. Yeah. And we just have to understand if we will have to suffer for the next 2, 3, 4 months, 6 months maybe, but after it will be over. If we have in front of us a new world, I think that something interesting is that grocery has been working very well in these during the crisis. And while I was not super convinced about the mixed models, restaurant mixing grocery and F&B and eating, I'm not sure these were very convincing models before the crisis, but these could be very resilient models if we have a new world in front of us, which is far to be sure.
Okay, so I have another question for you, Vincent, then you can share. It's like affirmation. I don't think normality will happen within the next 12, 24 months until a vaccine is available to everyone. It's not only social distancing is our core strength, atmosphere and services. We will act in very odd environments. Personally, I believe this crisis is our industry start after reopening. What's your opinion about it? So when start this crisis?
So this is very interesting, an excellent question. And I mean, the most complex thing we have to understand is this ramp-up period, whether it's 2 months or 2 years. I think that we have to be very humble. We just don't know. We don't know how long the virus will exist. We don't know when a vaccine or even a medicine will be available. As advisors, you know, we try not to believe things, but we try to understand what we see. And what I see is that when Hermès, the French luxury brand, reopened in China after the crisis, they did almost 3 million euros in one day in one single shop. So I think that this can be a matter of strong hope. That's maybe the only thing I can say. But then for the length of the ramp up, it's something that we just don't know. We'll discover it in the next months. We'll probably know much more in September, October, after the summer, and when the autumn will come. We just have to be very cautious on what will happen at the time.
Vincent, actually, it's very interesting. The parallel you just made with Hermès. I really think it's the same after COVID, when maybe the vaccine will be found. It's probably that will be more than 100% of the consumption did pre-COVID, simply because we lack something. We lack the hamburger, we lack the sandwich, we lack.
Yeah. And when you do 3 million euros in one day in one shop, so I can understand that, of course, the price point of Hermès is very far from the one we experience in our industries, but it means that you don't have 1 or 5 customers in the shop in the same moment, of course. So I think that togetherness will come back again. I really hope so.
So, okay, last few questions. We have so many questions. So I ask you the last one for you, Francesco. Is this the time for an investor to look into cheap takeovers and take the risk of running the business through uncertain times?
It might happen. For sure, someone is looking at what I call opportunistic buys. Surely the investor has to have a very clear view. It's not a bet, but it's a very clear view on the reopening time, or maybe new dynamics to be put in the industry, such as a new business model, a mixed kind of activity. maybe relying on some delivery or pickup, that might be the time in which a smart investor can make a lot of money by buying cheap and selling high when situation will recover.
So thank you. The time is over now. Thank you for being with us today, you both.
Thank you, Francesco. Thank you, Maria Paola. Thank you, everybody. We were very happy to be with you, and we hope to see all of you very soon.
Yes, of course. We look forward to see you again for the new talks. Please remember that on Monday, May 4th at 11:30 in the morning, we will have with us Mario Bauer and Mette Lycke from the CEO of Too Good To Go. So please stay with us also on Monday 4th. Okay, thank you for coming again. Bye-bye, everybody.
Thank you very much for the invitation.
Ciao.
Talk to you soon. Bye.
Ciao,
Bye-bye. Ciao, ciao.